He runs one of the most powerful trading empires in the world. He is one of the most aggressive and influential investors alive. His firm, Citadel.
Citadel hosting a datathon, a competition for potential hedge fund talent here at the NYSE.
Ken Griffin's $30 billion Citadel gained 19.4% last year. This is beating out a whole host of other of its rivals.
Processes more trades than the New York Stock Exchange on some days. He's made a fortune managing risk in a way few others even understand. While many hedge funds follow trends or rely on market swings, Griffin built an approach that's entirely different, driven by data, discipline, and an obsession with execution. His strategies have quietly shaped modern financial markets, and for decades, his performance has placed him in a class of his own. Ken Griffin doesn't chase headlines. He doesn't talk much. But when he moves, markets respond. Today, he runs Citadel and Citadel Securities, two companies that play an invisible role in almost every stock trade made in America. Yet for someone at the center of so much, he remains a mystery to most. Ken Griffin was born in 1968 in Daytona Beach, Florida. He was an ordinary kid from a middle-class background. His interest in finance came early. By high school, he was already studying the basics of investing, but it wasn't until he arrived at Harvard University that things began to accelerate. Griffin came across an article in Forbes magazine about convertible bond arbitrage. It sparked something. He read everything he could find on the subject. Then, in his second year at Harvard, he began trading from his dorm room. In 1987, he installed a satellite dish on the roof to get real-time financial data. This wasn't common at the time, but for Griffin, the ability to move faster than others was essential. He raised a small amount of capital, about $265,000, from friends and family, and began trading during one of the most volatile periods in financial history. When the market crashed on October 19, 1987, what's now known as Black Monday, Griffin wasn't caught off guard. He had hedged his trades properly and ended up making money, even as many professional investors faced steep losses. His returns caught the attention of Frank Meyer, the founder of Glenwood Capital. Meyer gave Griffin $1 million to manage. Within a year, Griffin had returned 70%. This wasn't just early luck. Griffin was showing the same qualities that would later define his career: preparation, discipline, and a strong grasp of risk. By the time he graduated from Harvard in 1989, it was clear to many around him that he wasn't just another finance student. He was something else entirely. After graduating from Harvard in 1989, Ken Griffin didn't wait long to start building something of his own. In 1990, at the age of 22, he launched Citadel with $4.6 million in capital. It wasn't a large fund by Wall Street standards, but from the start, Griffin had a clear idea of what he wanted Citadel to be. He didn't want a firm that followed the crowd. Instead of placing big bets based on market sentiment, Griffin focused on data, systems, and execution. He believed that with the right information and the right structure, he could create a firm that consistently found opportunities, no matter the market conditions. One of Citadel's early strengths was its use of technology. While other hedge funds relied heavily on instinct or broad economic forecasts, Griffin built teams that analyzed data and used it to make highly targeted trades. He also implemented strict risk controls. Positions were carefully managed and losses were cut early. Griffin's goal was never to build a hedge fund that just performed well in good times. He wanted Citadel to be durable, resilient, capable of delivering returns regardless of the economic cycle. By the end of the 1990s, Citadel had already grown to manage more than $2 billion. It had earned a reputation for being disciplined and reliable, and Griffin had earned a reputation for being one of the most focused and demanding leaders in finance. The name Citadel wasn't chosen by accident. It suggested protection, structure, and power, and over time, it would come to represent one of the most influential firms in the industry. Citadel grew quickly in the 1990s, but what set the firm apart wasn't just its returns. It was how those returns were achieved. Ken Griffin invested heavily in technology long before it became standard practice across the industry. Griffin understood that markets were changing, trades were moving faster, information was spreading quicker, and the firms that could process data more efficiently would have an edge. He hired scientists, mathematicians, and engineers, not just finance professionals. Citadel began building its own internal systems to analyze patterns, manage risk, and execute trades faster than competitors. It was one of the first hedge funds to operate more like a tech company than a traditional investment firm. By the early 2000s, Citadel was running multiple investment strategies at once. It had dedicated teams working across equities, fixed income, commodities, and derivatives. Each strategy was supported by its own models, risk systems, and research. Griffin insisted on a culture of constant improvement. Teams were pushed to refine their models, measure performance with precision, and learn from mistakes quickly. Citadel's infrastructure allowed traders to focus on their edge because the systems handled everything else. Griffin didn't rely on a single idea or strategy to succeed. He built a system that could adapt. And in markets where conditions change rapidly, that adaptability became one of Citadel's greatest strengths. By 2006, Citadel was managing more than $12 billion. But for Griffin, it was never about the number. It was about building a firm that could win in any environment and do so with consistency. In 2002, Ken Griffin launched Citadel Securities. At the time, most people knew Citadel as a hedge fund, but Griffin saw an opportunity to expand, one that would change how financial markets operated. Citadel Securities was built to be a market maker. That means it helps buyers and sellers complete trades by constantly quoting prices and standing ready to transact. Market makers play an essential role in keeping markets liquid and efficient. But Griffin didn't want to just participate in this business. He wanted to lead it. Most trading firms still relied on manual processes. Griffin believed it could be done better with automation, algorithms, and technology that allowed trades to happen faster and with lower costs. He built the business from the ground up, recruiting software developers, data scientists, and engineers. Their job was to design systems that could handle millions of trades every day, with minimal delay and maximum precision. Today, Citadel Securities is one of the largest market makers in the world. In the United States, it handles more retail stock trades than any other firm, often more than 25% of daily volume. On some days, it processes more transactions than the New York Stock Exchange. The firm operates quietly, behind the scenes, but its impact is massive. When someone buys a stock through a mobile app, there's a good chance Citadel Securities is on the other side of that trade. It helps set prices, match orders, and provide liquidity to the entire system. Griffin understood that in modern markets, speed and efficiency aren't just advantages, they're requirements. By focusing on automation early, he positioned Citadel Securities to become one of the most important players in finance. The financial crisis of 2008 was one of the biggest stress tests in the history of modern finance. For Ken Griffin and Citadel, it was a turning point. At the time, Citadel was one of the largest hedge funds in the world. The firm managed over $20 billion and operated with multiple strategies across global markets. But when Lehman Brothers collapsed and liquidity dried up, even the strongest firms were affected. Citadel's portfolios were under pressure. Some of its positions, including those in convertible bonds and credit markets, dropped sharply in value. For the first time in its history, Citadel faced significant losses. Griffin had always emphasized risk control, but in 2008, risk came from places no one expected. Entire markets froze. Counterparties failed. The usual models didn't apply. There were rumors that Citadel might not survive, but Griffin didn't panic. He made two decisions that would ultimately define his leadership. First, he refused to gate redemptions. While other hedge funds locked up investor money, Citadel allowed clients to withdraw funds freely. Griffin believed that trust mattered more than temporary stability. Second, he doubled down on communication. He met with investors, explained what was happening, and detailed how Citadel was managing through the crisis. It wasn't a perfect year. The firm posted double-digit losses, but it didn't collapse. By mid-2009, Citadel had recovered most of its losses. Within a year, performance was back on track. For Griffin, the crisis confirmed the importance of building a firm that could weather storms, not just capitalize on booms. It also pushed him to invest even more in technology, systems, and scenario planning. Citadel's resilience during the crisis didn't just protect the firm, it strengthened its reputation, and it gave Griffin the confidence to expand further in the years ahead. Inside Citadel, performance is everything. Ken Griffin is known for setting a high bar. His approach to building teams is based on a simple idea: surround yourself with the best people and give them the tools to succeed. From the beginning, he recruited not just finance professionals, but scientists, mathematicians, engineers, people who could think deeply, act fast, and adapt quickly. Griffin doesn't believe in hierarchy for its own sake. He believes in merit. At Citadel, roles are earned through performance, not tenure. Results matter more than opinions. The firm has built a culture where ideas compete, and the best ideas win. To maintain that edge, Griffin has made hiring a strategic priority. He regularly visits top universities, including his alma mater, Harvard, to recruit new talent. Citadel looks for people who can handle pressure, who learn quickly, and who are willing to challenge conventional thinking. Interns at Citadel go through rigorous training, often working on real-world problems from day one. The culture is intense, deadlines are strict, mistakes are studied, but not tolerated repeatedly. It's not for everyone, but for those who thrive under pressure, it's one of the most rewarding environments in the financial industry. Griffin also invests heavily in training and development. Employees are encouraged to keep learning. The firm holds regular internal seminars, simulation exercises, and quantitative research discussions. Everything is designed to improve decision-making. He believes that sustained excellence comes from discipline. That's why Citadel operates more like a laboratory than a trading floor. Every trade, every model, every assumption is tested, validated, and tracked. Over time, this culture of precision has become one of Citadel's biggest advantages. It allows the firm to innovate faster, manage risk more effectively, and execute trades with unmatched accuracy. Ken Griffin is not a household name for most people, but the firms he controls play a role in nearly every trade made by ordinary investors in the U.S. stock market. That's because Citadel and Citadel Securities sit at the heart of modern financial infrastructure, serving as the invisible engine behind a large part of the retail trading ecosystem. Every time someone places a trade through a popular app like Robinhood, there's a good chance that Citadel Securities is the one executing that trade. Griffin's firm pays retail brokers for order flow, meaning they route customer orders to Citadel instead of public exchanges. In return, Citadel fills the trade, often at slightly better prices than the public market. To most people, that process goes unnoticed. But within the industry, it has sparked debate. Supporters say Citadel's model improves market efficiency and gives individual investors better execution. Critics argue it gives Citadel too much influence over pricing and execution, creating conflicts of interest in a system that isn't fully transparent. For Griffin, the focus has always been on efficiency. He believes financial markets should run like high-speed networks, where transactions happen instantly, prices adjust in real time, and data flows freely. Citadel Securities has invested heavily in this infrastructure, building systems that can process millions of trades every day with near-zero latency. This silent dominance has turned Griffin into one of the most powerful figures in global finance. But unlike many Wall Street leaders, Griffin rarely seeks the spotlight. He speaks carefully, rarely grants interviews, and prefers to let the numbers speak for themselves. He doesn't chase public attention, but he doesn't avoid influence either. Behind the scenes, his firms have become critical to the functioning of U.S. markets. And that's exactly how Griffin designed it. In early 2021, the financial world witnessed something unusual. A group of retail traders on Reddit, using the forum Wall Street Bets, coordinated to buy shares of GameStop, a struggling video game retailer. The stock surged dramatically, creating one of the most talked-about short squeezes in financial history. Hedge funds that had bet against GameStop faced massive losses. For a moment, it seemed like the power dynamics of Wall Street had shifted, and right in the middle of it all was Ken Griffin. Citadel and Citadel Securities were not shorting GameStop, but they were involved in the trading. Citadel Securities was one of the main market makers handling the flood of retail trades pouring in from platforms like Robinhood. At the same time, Citadel, the hedge fund, had provided a $2.75 billion investment into Melvin Capital, one of the funds that had taken large short positions in GameStop and was facing severe losses. This dual role, executing retail orders while backing a fund on the losing side, sparked a wave of criticism and suspicion. When Robinhood restricted the buying of GameStop and other so-called meme stocks, public anger intensified. Many believed Citadel had influenced the decision, especially given its financial relationship with Robinhood. Griffin firmly denied this. He stated that Citadel had no role in Robinhood's internal risk decisions, and the company's CEO echoed the same. Griffin was later called to testify before Congress. His appearance was reserved and measured. He explained Citadel Securities' role in the market and defended the firm's actions during the volatility. The GameStop episode didn't damage Citadel financially, but it did push Griffin into the public spotlight more than ever before. For many retail traders, he became a symbol of institutional power. But to industry insiders, the episode simply showed how deeply embedded Citadel had become in the structure of modern markets. Griffin weathered the moment, just like he had done in every crisis before. Ken Griffin is best known for finance, but outside the markets, he has quietly built another legacy, one based on philanthropy, education, and civic influence. Over the years, Griffin has donated more than $2 billion to causes ranging from scientific research and education to public policy and the arts. His giving reflects his belief that individuals who benefit from society should help improve it. But, like his trading, Griffin's philanthropy is focused, data-driven, and long-term. One of his largest contributions was a $150 million donation to Harvard University, his alma mater. At the time, it was the single largest gift in Harvard's history. He also made major contributions to the University of Chicago, the Museum of Modern Art, the Natural History Museum, and public schools in Florida and Chicago. Griffin doesn't just donate to institutions. He often works with them to improve structure and strategy. In education, he supports curriculum reform and teacher training. In medicine, he backs organizations focused on scalable, evidence-based solutions. He has funded pandemic research, precision medicine initiatives, and programs designed to expand access to mental health care. In 2022, he announced he would relocate Citadel's headquarters from Chicago to Miami. The decision was based on several factors, including crime, taxes, and business climate. Griffin emphasized that cities needed to be safe, well-governed, and economically competitive to retain top talent. The move sparked national discussion about the role that civic conditions play in shaping business decisions. While Griffin doesn't speak often in public, he does meet with policymakers. He has donated to political campaigns and regularly supports candidates who align with pro-business policies. But his involvement is typically quiet, behind the scenes. To those who know him, Griffin remains a private individual, focused, reserved, and constantly thinking about what comes next. Ken Griffin doesn't see the world the way most investors do. For him, markets are not something to predict. They are systems to understand. His approach is grounded in logic, preparation, and the belief that edge comes from discipline, not luck. Throughout his career, Griffin has emphasized the importance of risk management, but not in a defensive way. He believes risk is something to be studied, modeled, and used. At Citadel, every decision is filtered through layers of risk controls, testing, and statistical modeling. Every trade is tracked, measured, and reviewed. This precision is not about avoiding risk entirely. It's about taking the right kind of risk. Griffin often compares financial markets to competitive sports. He talks about investing as a discipline where the rules are always evolving, and staying sharp means never assuming you know enough. In his words, you must constantly re-earn your right to compete. He rarely makes public predictions. Instead, he focuses on probabilities. His teams study correlations, market structures, and behavioral shifts across thousands of data points. Decisions are based on a combination of quantitative models and human judgment. Internally, Griffin encourages debate. He believes that challenging assumptions, especially your own, is how progress happens. At Citadel, ideas are dissected. Arguments are welcomed. There's no room for ego, just results. That mindset extends beyond investing. Griffin has spoken about the dangers of complacency in both business and policy. He believes long-term success requires continuous evolution, and for him, that means reinvesting in people, systems, and research, year after year. He's not driven by headlines or short-term wins. He's focused on building a firm and a philosophy that lasts. Ken Griffin doesn't talk much about legacy, but it's clear he's building one, both in real time and with the long term in mind. Today, Citadel manages over $60 billion in assets. Citadel Securities, its sister firm, handles more than a quarter of all U.S. stock trades on an average day. Together, these two companies are among the most influential institutions in global finance. And yet, Griffin continues to operate with the same intensity he had when he was trading from his Harvard dorm room. He still reviews performance metrics daily. He still questions assumptions. He still pushes his teams to improve, no matter how well they're already doing. For Griffin, success isn't a destination. It's a process, one that never really ends. In interviews, he rarely reflects on the past. When he does, it's usually to study a decision, what worked, what didn't, and how to learn from it. That forward-looking mindset is what has kept Citadel relevant for more than 3 decades in a business where most firms fade in just a few years. The firm continues to innovate. It's investing in machine learning, new datasets, and global expansion. Griffin is also mentoring a new generation of leaders inside Citadel. People who are being trained not just to execute trades, but to build systems, manage risk, and think at scale. At the same time, he has become a quiet influence in global finance, not just through trading or investment performance, but through how markets are structured, how firms are built, and how talent is developed. What Ken Griffin has built is more than a hedge fund. It's an ecosystem. And whether he talks about legacy or not, it's clear that he's reshaping what the future of finance looks like, one decision at a time. Ken Griffin has never claimed to have all the answers. He studies the world through data. He builds systems, he asks hard questions, and he stays grounded in one simple idea: understand what you're doing and do it better than anyone else. He doesn't fit the image most people have of a hedge fund billionaire. He rarely speaks in absolutes. He doesn't chase attention. And even though his firms shape financial markets every day, he often works from the background. For Griffin, money has never been the goal. It's the result of precision, discipline, and years of iteration. He doesn't talk about vision or dreams. He talks about structure. He talks about execution. In an industry known for big personalities and short memories, Ken Griffin has built something different, something durable. He remains intensely focused, still learning, still improving, still competing, and he's shown, over decades, that the edge in investing doesn't come from taking wild risks. It comes from knowing exactly what game you're playing and being better prepared than anyone else.